Well, I'm joined with Saket Mudra. Saket leads our U.S. equity strategy. Welcome, Saket.
Thanks, Kevin.
And our theme this quarter is patience and perseverance. And when it comes to a long-term investment strategy, why is patience and perseverance so important?
You raise a very good point, Kevin, about patience, because I read somewhere where it says that we as fundamental investors are essentially paid to endure the pain because most people cannot. And I find the statement to be completely true because a lot of times your investments may underperform for a very long period of time. And if you cannot take the pain and you cannot endure and cannot persevere, you might actually get out of the investment and miss all the reward that the investment might yield. So it's really important for us to be patient with our investment and let the thesis work out.
Sure. Okay. Good. And it's, that's easy to say, Saket. It's tough to watch a stock or, a portfolio kind of do nothing for a while. So, as fundamental investors, what gives us the conviction to kind of stay with an investment long term?
Yeah, the conviction, conviction is really important in your thesis. And you hit a key word there called the fundamental. There's a reason why we are specifically called fundamental investors, or we talk about fundamental investing, because it's essentially understanding the businesses that we own. Because when we own a stock, we are buying part of a business. And if we don't understand the business, we cannot differentiate between the market price and the value of the business. And if the price is much lower than the value, we got to stay with the fundamentals. We got to ignore the price, and we got to stay convicted. And the fundamental work is essentially what gives us the conviction.
So, Saket, you talked about the fundamentals and really following the fundamentals with regard to our investment process. Can you give us an example of this in action?
Yes, Kevin. One of the smaller holdings that I wanted to talk about is Hibbett Sports. They are a specialty sports retailer in the United States, operating mostly in smaller towns. So think of them as Sport Check in smaller towns. We bought this stock, when we were looking for retail investments back in 2017, as the entire sector was completely decimated due to fears because of either Amazon or e-commerce taking over the retail space. We looked at almost 20 businesses back then and zeroed in on Hibbett. There were a few things that we really liked. The first one was balance sheet. This company had net cash on their balance sheet, so no debt, but some cash to spend if they wanted to. We really liked that because given how the industry was changing, we felt it was important to have that financial flexibility and take advantage if the situation presented itself. The other thing we really liked was their value proposition. We felt that the market was completely underestimating why Hibbett existed and what they offer to the consumers. For example, they are located in smaller towns where there's almost no competition because there's not enough room for 3 or 4 sports specialty retailers. And they're right next to a Walmart store most of the times, which means that people going to grocery can straight away walk into the store. So that was really important to us. Second, they were offering choices. So the people were not confined to buying just either one brand and one shoe. They can actually take a look and buy a number of things and choose. So that was important. The third and the most important thing we felt was the market was completely underestimating the omni-channel strategy of the company. What I mean by omni-channel is a lot of consumers, who buy from Amazon, they buy from Amazon and get it shipped to their homes. But there's also a large segment of consumers who prefer to either buy it online and pick it up at the store, or want to see their goods before they buy them. Or in some cases, if the shoe doesn't fit, let's say in a sporting goods store, they want to be able to return it to the store. So we really liked Hibbett's omni-channel strategy, and we thought that they would be able to win market share over a period of time if they executed, which is what exactly happened during the 3 year of our holding period. Hibbett gained share in the category from their larger peers because the peers could not execute as well. So something like a Foot Locker didn't do as well compared to Hibbett. And that's what, for us, emphasizes fundamental research to know the company really well.
Right. Okay, excellent. So we remained patient and we held this company and we did our fundamental homework and stayed convicted. The key question is, Saket, was our patience rewarded?
Yeah, this story has a good end, so that's the good thing. But essentially, like Hibbett signifies what we mean by patience. Because as you can see in this chart, for the first 3 years, Hibbett had returned 0% for us. No returns in a 3-year period. And at the same time, if we had just bought the market or S&P 500, we would have made almost 50% returns. So, that's where the conviction and the fundamental work came in, because as you can see in the chart, during times when the stock went down, since our thesis was progressing, we kept adding to the stock and adding to our position. Eventually, the catalyst appeared just this last quarter, around August 20th, when the company reported results, and they reported blowout numbers, and the market started noticing that there's something fundamentally happening in this company, and it's not, like probably a piece of junk that people were thinking for the last 3 years. In a matter of 4 weeks only, not only we gained just the 50% that we were lagging the market with, we actually made over and above almost 30%. So imagine having a cumulative return of over 30% with the market in a matter of 4 weeks. And that's why patience, perseverance, doing your fundamental work, and remaining convicted in your investment thesis is really important.
Okay, thanks, Saket. That's very amazing that we held the company for 3 years, made no money, and then we made all our return in the last 4 weeks. And I think we have recently exited the entire position for a nice profit. So I like the ending to that story. Thanks.